Well, howdy folks, and welcome back to the channel. Today we'll take a look at a significant tax change that is headed our way that might have a significant impact on your private investigator firm. Now really quick, let me say I am not an attorney, a CPA, or a tax expert, nor do I play one on YouTube or on TV. Nothing I say should be considered as legal, financial, or professional tax advice. I always recommend you consult with a financial expert, an accountant, or a tax professional to get the best advice for your particular situation. Now, in the event that you have been negligent in filing income taxes that you may owe from your online sales, it is possible that your days of operating under the radar may be coming to an end. You do not have to sell products online for this to affect you. If you are taking payments from clients online, then listen up. I want to discuss the new $600 1099K level and how it affects you as a result. You heard me right, the new $600 1099K threshold, but that's not all. Hang on, there's more to come. Really quick, the 1099 NEC, which stands for non-employee compensation, and prior to 2020, I believe it was the 1099 MISC, which stands for miscellaneous, are not the forms I'm referring to. The 1099 NEC, which stands for non-employee compensation, is the form you're supposed to send to your independent contractors when you pay them at least $600 during the year. Or if you are doing subcontract work for other PI firms or doing any work for attorneys, insurance companies, or other businesses, you should receive a 1099 NEC non-employee compensation form from them. The big change I am referring to is regarding the 1099K and the new threshold, which begins in 2022. It is likely that you have received a Form 1099K if you have ever had sales of at least $20,000 on any specific online payment platform throughout the year and at least 200 transactions in total. The 1099K is the form that the Internal Revenue Service, IRS, mandates your payment processors give you if your transactions exceed specified levels in any given year. The reporting threshold before was $20,000 and 200 transactions before the payment processing provider had to report a 1099K. For example, if you had at least that level of sales, $20,000 that was processed by, let's say, PayPal, you were obliged to receive an IRS Form 1099K detailing the entire dollar amount processed for the year. However, they are not only providing that information to you, folks. Listen to this. They are also sending it to the Internal Revenue Service. A large number of people, perhaps hundreds of thousands or even millions, continue to omit to report their internet selling activities, including payments received for services from clients on their tax returns. Some are oblivious to the fact that they should, while others simply procrastinate or are unsure of how to go about it. However, if the Internal Revenue Service, the IRS, obtains a record of your online selling money but does not find that income declared on your tax returns, they will send you a nice letter along with an updated tax bill. Consider the following scenario. You made $20,000 in sales this year and received payments through PayPal, but you did not record that revenue on your tax return. You will be issued a bill for taxes by the IRS. That tax bill could be for an additional $2,000 to $5,000 by the IRS if they discover that you did not declare the $20,000 on your tax return. Your tax bill, of course, will depend on your previous year's income tax rate. This warning from the Internal Revenue Service is generally sufficient to send somebody into a downward spiral. Keep in mind that the Internal Revenue Service is not taking into account any of the deductions that you are entitled to. Typically, what a person would need to do is update their tax return to reflect not only the $20,000 in sales that the IRS anticipated to see, but also all of the business deductions that they were entitled to if they had not already taken those deductions as a result of the mistake. The question is, what happens if you earn less than $20,000 and don't receive a 1099K? Is it correct that you are not required to record that income? No is the simple answer here, folks. This is an all too common myth that needs to be corrected. Although the Internal Revenue Service may not have a record of it, this does not relieve you of your obligation to disclose it. Even if your income falls below the threshold, you are still required to report your business activity on your tax return. Of course, some exceptions may apply. There are millions of people who fall below the income line, and many of them do not record all of their company income. And as a result, the government is forced to find innovative new ways to raise funds to support its operations. Do you have any idea where this is all going, folks? Hang on, this is going to blow your mind. Because of the American Rescue Plan Act of 2021, the 1099-K barrier was dropped from $20,000 and 200 transactions to only $600 and no longer requires a minimum amount or a maximum amount of transactions. That is right, folks. Now all online payment processors will be reporting all incomes totaling over $600 every year. For those who have reported their online sales activity, regardless of whether or not they have gotten a 1099-K, kudos to them. This will make no difference to them. The big news here, folks, is if you haven't disclosed your sales activity in the past due to the fact that you haven't obtained a 1099-K, you won't be able to continue to hide or at very least go unnoticed after 2022. There are a lot of people who are about to receive a tremendous wake-up call and potentially a huge IRS tax bill in a very short period of time. People in certain states, such as Vermont and Massachusetts, have been coping with this for the past few years because their state legislators had already implemented the $600 threshold. Another thing to keep in mind is that the amount indicated on your 1099-K is not necessarily the amount of money you actually earned. The amount on your 1099-K given frequently includes any sales tax that has been collected, and any refunds that have been issued to clients are typically not deducted from the 1099-K total. As a result, if you aren't accounting for those items on your tax return, you are most certainly overpaying your taxes. Generally speaking, you'll want to make certain that you're properly reporting your gross revenue on your taxes. You should take the amount that is at least equal to the 1099-K number and deduct the amount necessary to make your tax return consistent with your own records. Now, if you're interested in learning how to expand and scale your business, you should watch this video.